This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Live from Bloomberg headquarters in New York City. Carol Massar, Tim Stenovec. I got to say, I've got 4 or 5 screens, maybe 6 up. I'm not quite sure where to start.
Should we start with Figma?
Let's go there.
It's the red headline. Hey, Figma shares finally have started trading. They were up 158% in their trading debut. They reached as high as 183%. But Carol, just moments ago, it's halted due to volatility. On the upside, there's a trading pause with Figma. FIGUS is the ticker. Yeah,
definitely front and center. We've seen a few IPOs this week. In fact, we're going to be talking with the founder of one. It's a chip IPO. The stock soaring for a second day. It began trading yesterday. Ambiq Micro's founder will be here with us. So that we are going to certainly get into. And listen, we got to talk about the Mag 7, right, Tim? Because we're seeing some outperformance. Not every name is higher, but Meta and Microsoft certainly are.
Yeah, that's on our radar from yesterday and in today's trade. But after the bell today, we're hearing from, of course, Alphabet. No, not Alphabet. Did I say Alphabet?
That's okay.
Yeah, that was
Apple
last
and
week.
Amazon.
Oh my gosh.
I know.
Apple and Amazon.
A lot.
The final 2 of the Mag 7, except for NVIDIA, that we got, in a few weeks.
Yeah, we're watching them all, though, because they are such an engine behind some of the moves that we tend to see in the market. We're also going to keep an eye on what's going on with trade. We did see White House spokesperson Caroline Leavitt saying that President Trump will sign an executive order on trade later today. That order to have to do with logistics on tariffs. At the same time, she mentioned that the U.S. Treasury Secretary Scott Bessent and U.S. Trade Representative Jameson Greer continuing talks with their Chinese counterparts. So, is it Friday yet?
No, it's not even close.
And by the way, it's really dark outside because it's going to start pouring any minute.
All right, all that and more over the next hour. By the way, Figma opened at $85. 33 was that IPO price. We're going to continue to cover this throughout the hour right here on Bloomberg Businessweek Daily, though. First up, a day's check of the day's trade and top business stories. Here she is, Amy Morris, in for Charlie Pellet. Hey, Amy.
All right, thank you, Tim. Yeah, trading halt for design software maker Figma. Backers raised $1.2 billion in an initial public offering, pricing its shares above the marketed range. Shares opened around $85, but right now the trading has been halted. President Trump signed 17 letters to the CEOs of pharmaceutical companies, calling on them to take action within the next 60 days to lower drug prices. S&P Pharmaceuticals Index now down more than 1% to a session low. We do check markets for you all day long here at Bloomberg. The S&P 500, little changed on the downside. NASDAQ is up 0.2%. The Dow is now down 0.3%. The 10-year Treasury yield at 4.34% and the 2-year yield at 3.94%. Microsoft reached a $4 trillion market capitalization after reporting quarterly earnings that beat Wall Street expectations, reporting better than expected growth in its cloud business. Microsoft shares now more than 4% higher. eBay shares jumped after the company projected sales topping analyst estimates, suggesting optimism for continued consumer resilience at a time of shifting U.S. tariff proposals. Shares of eBay right now 19% higher. On-demand news for on-demand news 24 hours a day. Subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec.
All right, so much coming at us. Amy Morris, thank you so much with the rundown. Hey, yeah, one day after the Fed decision, one day before the closely watched monthly jobs report, and it's a day when we got, Tim, a bunch of data that showed stubborn inflation and weaker than expected personal spending.
Bloomberg TV and radio international economics and policy correspondent Michael McKee is with us right now. He joins us right here in the Bloomberg Business Week studio. Mike, you were on Bloomberg Surveillance with Tom and Paul a little earlier, how everyone at the Fed seemed pretty comfortable at the press conference, but based on the recent data flow, including today's and ahead of tomorrow's jobs report expectations, does the Fed decision and commentary to you, is it checking out?
Yeah. I mean, I think
in a word, yeah.
The data today, yeah. I mean,
when did you become a man of so few words?
I thought you were asking me in here to talk about the Major League Baseball trade deadline today.
We may get to it.
That would be just answering your own questions because I have no idea what you're talking about.
But the data we got today basically makes Powell's case. The case that he was making yesterday was that we don't know what's going to happen with inflation because the president's taken so long to get this stuff going, and now we're finally going to start getting it, theoretically, tomorrow, and it will take a while to get into the economy. And we also don't know what this will do to the economy, except that right now the economy looks fairly solid and the labor market looks fairly solid. And that was all kind of reinforced by the data we got today. The inflation data rose, and it doesn't look good. And, you know, if we still have this kind of news coming in September, it's bad for the idea of a rate cut. But it's not going out of control, and it's based on some things that are not tariff related. You look at the initial jobless claims numbers, they don't move, and you know, it's not like companies are firing people, so they may not be hiring. We'll find out tomorrow, but they may not be firing. Incomes went up okay, wages were low, but the employment cost index showed a big gain in wages, and spending rebounds. It wasn't a huge amount of spending, but it was up from what we saw. So overall,
we're doing okay.
Yeah.
Right? As the U.S. economy. How much of this did Jay Powell and the Fed have? None. Okay. So so pretty good.
No, they
Jay
had
Powell and company, right?
They had the GDP report, as we all did yesterday, but they would not have gotten anything by the time of that meeting.
It was such a fascinating meeting, and I don't know. I know we're not supposed to have opinions on things, but it felt like that was a Fed chair being a Fed chair in terms of really looking at the data, thinking about the mandate. And I know there was two dissenters, and I don't know, some people said that maybe that was political. Some said Jay Powell was being political. But what you are saying is, based on the data, all of this made sense. But how do you kind of roll in the two dissenters? Because that was, the first time we saw that in more than 30 years. Yeah,
there could be politics to it. But
they were appointed, right, by
the
President Trump.
And politics in the sense that they want to express their dissatisfaction with the direction that it's going right now, so perhaps they're considered
or politics in the sense that Chris Waller would like to be Fed chair.
Okay, that's what I was getting at.
Yeah, I mean, and he would tell you he'd like to be Fed chair, but he would also argue that he's not making the dissent case because of that. And his dissent case that he laid out a couple of weeks ago was very well reasoned, and it makes a lot of economic sense. And there's, I mean, you have to make certain assumptions that the rest of the Fed about the progress of the economy, the rest of the Fed disagreed with, but it wasn't like wildly Trumpish. You know, it was a well-reasoned thing. And so because it was that, and because Waller has the personality he has and gets along with all these people and is very well respected as an economist, I think they just put that aside, and the rest of the open market committee, and they say, okay, that's a good argument. We don't necessarily agree, but you did a good job of explaining yourself, and nobody's taking it personally, and nobody's looking at it as any kind of attack on Chairman Powell. I mean, you go back to the Volcker years, you had four governors at the time, they called them the Gang of Four, who basically tried to vote against him every time because they did not like the fact that he was raising rates, all that. And that was quite political, and that was quite an attack on Volcker. But
remind us how that looked in hindsight.
Well, obviously, in hindsight, Volcker is the patron saint of central bankers now because he stood up to the political pressure, and he brought down inflation for decades.
Just before we go, jobs tomorrow. What are we expecting? What are you watching for? Jay Powell said labor market's a really important statistic to watch.
More of the same, basically. The Fed is watching the unemployment rate. They see that as the sort of benchmark for the overall economy and how it's performing and going to perform. And it's not so much the number. It's supposed to go up to 4.2 from 4.1. That's not a big move. It's the speed with which it would move. If you got up to 4.5 by September, the Fed would be worried because it would suggest that a lot of companies are starting to get rid of people because they see something in the economy they don't like.
Right.
A small rise isn't going to matter. And the hiring is slowing down, but companies are not firing. So everybody's just kind of waiting to see what's going to happen. We'll see you tonight at 11:59 or whatever, and see what happens.
Michael McKee, so appreciate it. International economics and policy correspondent at Bloomberg TV and Radio. Speaking of waiting, we were waiting for Figma shares to start trading. They have, and waiting for us downtown, Tim, is our own Caroline Hyde.
She's the co-host of Bloomberg Technology. Right now, shares are paused due to volatility, but they surged as much as 229%. The company raised $1.2 billion in an IPO. Caroline has been there all day at the New York Stock Exchange. She, in fact, interviewed the company's CEO a little earlier today. Caroline, why such a discrepancy between the IPO price and where this started trading?
I mean, wow, to triple. No wonder price discovery took so long and it took forever to get this opening trade. But really, the retail investment enthusiasm, the institutional investor enthusiasm has been phenomenal. This was 40 times oversubscribed IPO. People wanted in that much. And remember, they actually went out there and sort of auctioned this on the roadshow, trying to get a better price discovery than perhaps we've seen for Circle or for CoreWeave. But the pop has still been more than tripling of that $33 price that they priced at yesterday, in the opening trade coming at 85, and now it's above $100. People trying to wrap their head around the opportunity of this design software company. This is all about designers, says the CEO, Dylan Field. But he said, make no mistake, yes, I'm in this to grow the company, but not always to drive the share price higher. This is about the long term. This is about generative AI. This is about innovation. This is about M&A. He said he's going to take big swings. He's investing in this company longer term. Remember, he has more than 70% majority control in terms of shares. He can still do what he wants in terms of pursuing growth for this business, even though it's gone public, Tim and Carol.
Caroline, I want to understand, I feel like with all these companies that are coming out, especially when there's an AI connection, what exactly does this company do? Who's going to be their customers that will actually provide that growth going forward?
I mean, their customers are all the big names on the S&P 500, on the Fortune 2000, and they have 13 million users. In 13 short years since they first built this business, they now have 13 million monthly active users around the world. 80% of those are outside of the United States. Who are they? Yes, they're designers. They're designer of the website that you use, the designer of the application that you use on your phone, but they're also developers, and this is where the generative AI aspect comes into it. They've been really innovating in terms of product since even the Adobe deal was called off. Remember, they wanted to buy $20 billion for this particular company. It's now worth triple that. Adobe wanted it for the design side of the equation, but they kept on bringing us new products. You can now use generative AI with Figma Made, and that's a way in which you put a prompt in, and then suddenly you can create that website, that application with ease. You don't have to be a developer, but there are things for developers. There are things who want to create a slide deck around design. It's all about bringing people together on one URL to be able to keep on iterating on a particular website or app that you're designing. But really, Dylan Field feeling that the scale of this is nowhere near current standards of 13 million monthly active users. He wants to keep on building, and I think the opportunity is there. Remember, he's got startups snapping at his heels. He's got to keep on delivering when it comes to generative AI. It's a almost $55 billion market cap company, Tim, here out of the gate.
Yeah, and it's had a pretty incredible journey, given that a certain acquisition of the company did not work out. Caroline, before we let you go, what does it say about IPOs moving forward, especially in the tech space? I already had a source text me today expressing enthusiasm about this pop because he works for a company that is pre-IPO.
I mean, really, the enthusiasm has been so palpable here from the people who work in the business, but the early investors as well. I had Index Ventures on. Now, they invested at seed round. I had Kleiner Perkins. They were in at Series B round. And these are the companies that now have Discord that they've backed if you're taking Index. You've got plenty of companies eyeing if you're wondering about where Canva goes next. If you think about where the Klarna is waiting to go as soon as fall. All of these companies have been waiting on the sideline. But remember, Figma's done something quite unique. They have come at a market capitalization more than their 2021 round. You can't say that about Service Titan. You can't say that about some of the previous companies that raised earlier. So this is the key issue. We'll have to see whether those companies can get a valuation that wins out for all investors.
Caroline Hyde, the co-host of Bloomberg Technology, live just outside the New York Stock Exchange. Caroline's going to be joining us a little later, too, on Bloomberg Businessweek Daily to cover all the earnings after the bell.
All right, back to the macro, the Fed, the trade, the markets, tariffs, everything that we are keeping a watch on this Thursday. Even though it feels like a Friday, it is still Thursday. In particular, we want to dig a little bit into what we've seen in the dollar and the FX trade. Jayati Bharadwaj is with us. She's director in FX strategy for TD Securities back here in our studio. Good to have you here. A lot coming at investors. We've seen some strength as of late in the U.S. dollar. Let's go back to the macro. What's of note, especially in a week where we've heard from the Fed, got a decision. We have the White House still doing trade deals and tariff deals. There's some extensions. We're trying to figure it out. What's the important macro trade right now for the U.S. dollar?
Thank you so much for having me. Always a pleasure to join both of you in the studio. I think what we have learned from this week is that, there is still a lot of uncertainty, even with the trade deals being announced, particularly on the data side. With the trade deals being announced, you're obviously getting less confusion on the trade front, with EU being the largest trading partner. You have some certainty on what that tariff rate now looks like. But unfortunately, the Fed did come out yesterday and told you that there's still a lot of uncertainty on the data front that warrants a lot of caution, a lot more caution than what markets were priced for. Going into the meeting, markets were more than 50% priced for a September cut. They felt comfortable with the fact that the Fed should be coming and easing interest rates, but Powell gave no such indication because there's still a big risk out there, particularly on the inflation side, which is severely underpriced by markets right now, which is what we've learned, that while you're getting a little bit more clarity on the trade front, now we're utterly data dependent, because on the macro growth and inflation side, there's still a lot of uncertainty, which is not resolved with just us knowing those trade deals.
Why do you think inflation is being mispriced by the market right now?
So this is actually a very interesting question. So we actually have some in-house models, which is where we actually track trading currencies on the basis of different macro factors. So our macro factor, our growth factor, our equity factor, all of those factors are making a lot of money, but our inflation factor has actually been losing money, which is an indicator to me that FX markets have actually not been paying attention to inflation data. They think that with the tariffs and the uncertainty around the trade deals, focus has primarily shifted to the growth outlook. But one thing we are now realizing is that the baseline tariff rate is no longer 10%, it's at least 15%, which is also interesting because we don't know what that pass-through of inflation will look like. The last CPI report that we had... This is
something Bob Michel, on our Fed specialist, said yesterday. Like the range was more like either, I can't remember, 18 to 20, but it's much higher than the 10% that we've all been talking about.
Yes. And the last CPI report had, the market reaction was very telling. We had a downside surprise, but markets took it hawkishly because you saw the first signs of inflation tariff pass through into the goods categories, particularly into toys, which markets took to be very hawkish, even though the core CPI was a downside miss.
And forgive me, I meant Bob Michael. So what's interesting is, all right, so what does this mean for the dollar then going forward, in your view?
I would say that, we are bullish the dollar in the short term tactically. You still have August 1st, the deadline tomorrow, which is ticking. But there's two scenarios which can play out with most of the countries. Either you don't get a trade deal, which brings in a lot more uncertainty and volatility into your local assets. Or the second path is you do get a trade deal, but on terms which appear more favorable to the U.S. than your country, which is now actually leading into U.S. local equity market outperformance over other countries' equities. Both of these are actually dollar positive. So thankfully, in the short term, this makes my job a little bit easier because irrespective of a deal or no deal, it should feed into a little bit of a dollar bounce in the short term.
Stronger dollar, though, possibly problematic for U.S. multinationals in terms of selling their goods. So is that something to think about when we look at profits and profitability going forward?
Not yet, because we do think that this dollar bounce will be a bounce. It will not, bring up that, rise back of the U.S. exceptionalism. We won't get euro back to 105 or below that. We don't think it's that kind of a move.
Okay.
It's more of a short-term adjustment, which market needed given what was priced in.
We promise more time later. We love having you on with us. Jayati Bharadwaj, she's director in FX strategy for TD Securities, joining us. Coming up next, we got to go back to the Mag 7. So much coming at us. That's next.
It's 2 2:21 on Wall Street. I'm Amy Morris. The S&P 500 wiped out an advance that had reached 1% ahead of the jobs report and President Trump's tariff deadline. We check markets for you all day long here at Bloomberg. The S&P 500 now down 0.1%. NASDAQ little changed on the upside. The Dow is down 0.4%. The 10-year Treasury yield at 4.36%. The 2-year yield at 3.94%. Figma is a web-based interface design tool for websites, apps, and other digital products, and its shares jumped 229% in its trading debut today. Trading opened at $85 a share. It's now bouncing right around $105 a share. CVS Health raised its 2025 profit guidance as the company's Aetna health insurance arm and pharmacy unit outperformed expectations in the second quarter. Shares of CVS right now down 1%. For on-demand news 24 hours a day, you can subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec.
All right, got to Amy Morris in for Charlie Pellet today. Well, Meta Platforms shares soaring to a record after Facebook's parent company gave a strong revenue forecast and reported second quarter results that beat analyst expectations. Microsoft also rallying, not as much, but still a pretty strong rally, pushing it up intraday to a $4 trillion market cap. That after reporting quarterly earnings that beat the street's expectations. We should point out Microsoft reported better than expected growth in its cloud business, with its Azure cloud computing unit posting a 39% rise in sales. With the day after, with the roundup, back with us is someone we lean on big time when the numbers are coming at us in real time for what we need to know. Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, here in studio. Thank you for coming back. I know it's been a busy 24 hours for you. Meta and Microsoft, anything new that came out on the company's calls that you think is of import, or did it just kind of confirmed everything we got in the actual earnings?
You know, I look for the token count, so I was looking for that in the Microsoft call.
Mandeep token, token count Singh, right?
We're talking about it because you are talking about it.
And so Microsoft did share that for the full year, the $500 trillion number. The units get really big, but that's how this stuff works. And look, that's what I think Meta is missing. I mean, the print was awesome. Everything was great. But when you look at the app usage, WhatsApp, Instagram, Facebook, Blue app, you don't see the kind of jump that Microsoft Copilot or Microsoft GitHub apps have. And that is where the Gen AI usage is getting reflected. Meta doesn't have that bump in the usage. Still, ad pricing was very strong, which is why they had such a big beat.
Why doesn't it have that bump in the usage? Is it because people, as consumers, as customers of these products, because that's what we are, do we not associate Meta platforms with AI the way we do ChatGPT?
No, so it's about the core use case of Gen AI. Gen AI right now is being used in coding agents. That's where the GitHub Copilot comes in. It's being used extensively for search. Your ChatGPT use case, the Copilot, Microsoft Copilot use case. So in the case of Meta, yes, they have 1 billion monthly active users for Meta AI, but it's being used in WhatsApp. And within WhatsApp, nobody is actually going to Meta AI to ask questions. So that's where you will see the bump. Meta AI as a standalone app doesn't have the kind of monthly active users that ChatGPT and Gemini have, which is why all the frontier model companies have a separate app.
People don't go to these apps to ask questions because historically they're not known as places where you get answers. They're known as places where you look at photos, like in Instagram, or known as places where you communicate, like in WhatsApp. How does Meta Platforms change that?
So then my question is, if you're spending $70 billion in CapEx to get AI compute, not the traditional CPU compute, where are you using it? How is it driving engagement? And so next year, they're spending $100 billion. I would say 60 to 70% of that is going towards AI compute. Where are you using it? And that's, to bring it all home, token consumption. That's your AI usage. So if you're not sharing token count, if your engagement is not going up, I mean, your results are great because your traditional ad business, which is machine learning driven, is doing phenomenally well. They are optimizing for, showing you the most targeted ad. And that is what gets reflected in ad pricing. I do think they got a lift from TikTok's, uncertainty and the fact that TikTok could actually be banned after getting a couple of extensions. So all that video ad budget is going towards Instagram. In fact, there was a study that said if TikTok was to be banned, 60% of that ad revenue would go to Instagram, 20% would go to YouTube, 10% to Snap, and then Reddit, etc. So maybe they are getting that bump from TikTok uncertainty. But to my mind, the Gen AI usage is nowhere reflected in Meta's results yet. And they're talking about $30 billion additional capex, similar to Microsoft. But Microsoft has a backlog of $368 billion in cloud. And they grew Azure segment 39%. Next quarter, it'll probably be higher. So they have so much visibility to using that AI infrastructure that if you're a Meta investor, they're spending $100 billion. But you don't have that visibility. How are they going to monetize it?
So wait, so help me out. So the stock's up almost 12% as we speak, pretty much at its highs of the session. It's up almost now 33% year to date. So are investors maybe getting a little overenthusiastic about the AI impact to Meta?
So yesterday, Mark Zuckerberg in the morning put out this blog post about personalized superintelligence. What he's saying is this AI will improve on its own. So you don't even have to keep training it on open internet data. The AI that they are looking to build and deploy will be a lot more personalized AI that can learn about your habits, that you can use in your day-to-day tasks, which, again, to me, it's no different from what ChatGPT is.
They also talked about the metaverse at one point. But is that, like you keep saying that the other guy, that so much is kind of in-house, right? Used? Like, I'm just trying to understand, like, are investors getting this wrong, Mandeep?
Not wrong, because their core business is so strong that they can afford to invest in infrastructure. And it's a good thing they have pivoted from metaverse to AI. So having this infrastructure alleviates any sort of constraints they may have on the compute side. I mean, Microsoft called out how they are supply constrained still.
Right.
So imagine if Meta was to use public clouds, they would be supply constrained. They can't even find the compute. So at least from that perspective, they have all the compute available to deploy. Question is, what are they deploying and where will the engagement show up? Because it's not showing in their family of apps, and they don't have a standalone app like a Gemini. Like Google showed that engagement in AI overviews. They showed that in the Gemini app. I don't see that in the Meta family of apps.
Could it come?
It could come, yes. That's why they have poached all these smart researchers, and they're paying them 100 million plus salaries. So the hope is it will come, and that's why I think investors are buying into it for that hope that they have assembled a great team. Maybe it will come in next 2 quarters.
Okay. Well, in the meantime, investors certainly liking it. Shares of Meta are up about 12% as we speak. And Mandeep, of course, also talking about Microsoft. That stock's up about 4%. Mandeep, thank you so much. Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, here in studio.
Hey, now to the other big tech on our radar today. That would be Amazon and Apple reporting after the close. Let's bring in Bloomberg News Managing Editor for Global Consumer Tech, Mark Gurman. He joins us from our Bloomberg News Bureau in Los Angeles. Mark, the expectation today when Apple reports tariffs are going to be front and center. Will we get an update on the effect that tariffs have on Apple?
For sure. That's going to be a large part of the conversation. I anticipate during the March quarter, Apple said that they are anticipating a $900 million, so a sub $1 billion headwind because of tariffs in this June period. So we'll get an update on that. But overall, this is going to probably be a muted earnings report. I'm not anticipating a lot of fireworks. I'm mostly interested in the post-game commentary. I really want analysts to be asking, if you're watching this, analyst, here's what you need to ask. Definitely ask Tim Cook about succession. Definitely, put him on the fire regarding artificial intelligence, and definitely see what he has to say about his relationship with Donald Trump, and if that's going to come into place here to help them in the coming quarters with tariffs, because that's when the real impact is supposed to take place.
We talked with Laura Martin of Needham, and we're going to actually talk with her tomorrow. And she's talked about that maybe it isn't Tim Cook that needs to be at the company and leading them forward kind of for their next era.
She joins Walt Piecyk over at Lightshed as well.
Yeah, not alone. Is it time for a new leader at Apple?
There's a difference between if there should be a new leader at Apple and if there will be a new leader at Apple. And I'm in the business of telling our viewers what the reality is, what's actually going to happen, right? And what's actually going to happen is that Tim Cook is going to be the CEO of Apple for as long as he wants to be the CEO of Apple. And I anticipate that to probably be 3 to 5 more years, maybe 7 more years. I think he's going to be running that company for a very long time to come. I'm not anticipating any imminent change to who the CEO of Apple is. Right? There are a number of reasons for that. They're putting the design team under Tim Cook in just 6 months from now. If there was anything imminent related to a CEO change, they'd be putting the design team under who that next CEO is going to be. Tim Cook is probably going to end up becoming chairman of the board of Apple in the next year or two. Their current chairman, Arthur Levinson, is at that required 75 years old retirement age for being a board member at Apple. So you'll likely see that shift to Cook. That's something that Satya Nadella has done at Microsoft. He has both roles. Obviously, Mark Zuckerberg is a founder, but he has both roles. Given that Apple stock is up 1,500% since Tim Cook became CEO back in 2011, given that there was not certainty over how Apple would do in the post-Steve Jobs era, I think Tim Cook has bought a lot of goodwill with the one group of people that matters when it comes to CEO, right? The board of directors essentially has one job: to hire and fire the CEO. And I don't anticipate them firing Tim Cook.
Okay, we've talked succession. We've talked potential impact of tariffs. Mark, you know where I'm going now, and that's artificial intelligence. Are we going to get color from Tim Cook or anyone on the call about the AI strategy? I know there are a lot of questions about it.
Well, I can tell you exactly what he's going to say. He's going to defend the strategy. He's going to say that they've got new features coming, that they're working hard on it. They're starting to figure things out. They're not too worried about it. Maybe he thinks AI models are going to become commoditized in the coming years anyways. So it doesn't matter how much these companies are throwing at it, because everyone is going to have access to the same technology in the not too distant future anyways. So he'll pitch an upbeat message there too.
Is he right? I mean, or is that just sour grapes and being behind? I mean, Apple just lost, its 4th AI researcher in a month to Meta.
Yeah, there's the reality of what's actually going on behind the scenes, which is a disaster. And there's also the reality of what Tim Cook is going to portray today, which is that everything is fine, right? And so, the real juice is that they're losing people, they're bleeding talent, their AI models are behind the competition, they're not investing as much as the competition, their Siri features are still several months behind, and the overall Apple Intelligence product is a laggard in the industry. Then there's the other reality of sitting in this chair today, do consumers actually care? Right? And I think that right now consumers don't care. People are not going to stop buying iPhones because they're behind in AI. But talking about 2 to 3 years from now, yes, it's going to be a real problem. But you have to remember, are these models going to become commoditized in that same period of time or not? And is 2 to 3 years enough time for Apple to catch up? I think without an acquisition, no, but with one, I think they'll be fine.
You talk about caring, investors care. Stock's down almost 17% year to date. Stock down just a little bit ahead of earnings after the closing bell. Hey, Mark Gurman, thank you so much. Managing editor for Global Consumer Tech at Bloomberg News, joining us from our LA bureau. We talk about another hot IPO when we come back.
CEOs of pharmaceutical companies calling on them to take action to lower prices for Americans within the next 60 days. S&P Pharmaceuticals Index down more than 2% now, and that dragged stocks lower. The S&P 500 is little changed on the upside. NASDAQ is up about 0.3%. The Dow is down 0.3%. The 10-year Treasury yield at 4.35%. The 2-year yield at 3.94%. Figma is a web-based interface design tool for websites, apps, and other digital products. Figma shares jumped 229% in its trading debut today. Trading opened at $85 a share. Figma right now trading around $105 a share. Sources say Salesforce and ServiceNow are in advanced talks to invest about $750 million each in Genesys Cloud Services. The investments would value Genesys at roughly $15 billion and be a rare instance of enterprise software rivals backing the same company. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec.
All right. Thank you so much. Amy Morris in for Charlie. Well, another IPO today. Of course, we've talked about the VC-backed Figma. We'll have more on that in our next hour. We talked about with Caroline
It's up 219%. Just
a little bit of volatility, too, in the session. But talk about welcome, right? A warm welcome, certainly to the public markets, I should say. Just yesterday, we had another IPO, Ambiq Micro making its trading debut. Shares soared 61% in that first day of trading. It's been up as much as 34% in today's session. Right now, about a 15% gain. It's a maker of ultra-low power semiconductors for AI applications. It did raise $96 million in that upsized IPO. So let's get into it. The technology, the business, the outlook. With us in studio, Scott Hanson. He's the founder and chief technology officer of Ambiq. And as we said, joining us here at Bloomberg headquarters. Scott, your IPO, congratulations.
Thank you.
You did really well and continue to do so in a second day. About the outperformance, what about the business, in your view, can you tell the Bloomberg audience, justifies the performance and the reception that we're seeing in these first 2 days of trading?
I mean, look, I can't comment on day-to-day ups and downs, but what I can tell you is
I know
why,
you're happy.
Yeah. I can tell you why investors bought into the vision, right? And, our vision from the start, actually, from when I founded the company back in 2010, was to put intelligence everywhere, right? It was to take chips, take intelligence, and embed it in the billions of devices around us, in your watch, in your smart doorbell, in security cameras, and in everything. And in the last couple of years, it's really been about taking AI and breaking it out of the data center and moving it out to these same devices. So we do that by enabling lowest power chips out there. And I think that really resonated with investors. I think there's this belief that AI is breaking its way out of the data center. And in order to do that, you need to be energy efficient. That's what we've mastered over the last 15 years. So I'm taking all of this as an endorsement that people believe in that vision.
What's your moat? Because there is a lot of competition in the space, companies doing and trying to do what you're doing. How do you compete? How do you make sure that you actually have a moat here?
So actually, the company was founded out of the University of Michigan. So I did my PhD work there. We invented a bunch of technology that is now central to Ambiq. We've got a circuit platform that allows us to build chips that are 2 to 5 times more efficient than what's out there. We brand that as SPOT, sub-threshold power optimized technology. We could spend the next 2 hours talking about it. I won't bore you with that, but really differentiated and unique platform, patent protected, growing all the time. And what's really exciting is we now have a bunch more money to go fund the ongoing development of that.
What I'm curious about, and we talk about the semiconductor space all the time. There's a lot lopped into semis, and there's different kinds of chips, different types of chip companies. What is it that makes your AI chips different from what we're getting from the NVIDIAs of the world, the Intels of the world?
Most of those companies are thinking when they think about power, they think about watts and kilowatts, right? Watts and thousands of watts. We're thinking about microwatts, so millionth of a watt, and milliwatts, thousandth of a watt. So we're on completely different power scales.
So stuff that would go to smartwatch or glasses and so on and so forth.
Exactly. And there's a huge number of these devices. Even the likes of Qualcomm, let's say, who's made it big in phones, is still thinking in terms of hundreds of milliwatts and watts. And so we're yet below that. So a huge number of devices that want that kind of power.
10 years ago, though, when you guys were developing, or a little bit longer out, I mean, we weren't all talking about AI. It was certainly in our universe, but it's not like it is in the last 2.5 years. So was there a pivot in terms of what you guys were thinking about that your chips were going to do?
Yeah. And I'd love to tell you that I anticipated this, right? But I will say this. The company's name is Ambiq. Ambiq means ambient IQ, ambient intelligence. So it's always been about intelligence everywhere.
But what was the original mission?
And well, it was that, but it wasn't with AI. AI being this mathematical technique that we can use to really achieve intelligence. Previously, it was let's add sensors where there were no sensors before. Let's add a little microprocessor that can crunch numbers. But suddenly, with what the world saw with the launch of ChatGPT back in 2022 was, oh my gosh, we can do some incredible things with these AI models. That really lit a fire under a lot of our customers because they thought, oh, okay, these tasks that maybe were accomplished by traditional algorithms can now be achieved with AI. And that was a turning point for us. So actually, we like to think of the company in 2 phases. A phase 1 was, it was really about extending battery life. We helped a lot of our customers in the wearable space, in smart home space, medical device space, go from a week of battery life to 2 weeks of battery life or 4 weeks of battery life. At some point, that doesn't matter anymore, though, right? And what they really want is they want to add more computation, more intelligence in that same budget. So phase 2 has really been about that. It's been about let's put AI where there was no AI before.
A big focus for us, and I know a big focus for companies that actually build technology has been supply chains, given the new tariff regime that we're in. We are expecting to hear from the president at 4 o'clock today when he is going to sign an executive order on trade. We'll bring you updates from that, of course, as we do get them. In the meantime, talk to us about how your business has shifted geographically. Has it moved completely out of China? What's the status there?
So if you were to look at our revenue from several years ago, specifically in our prospectus for the IPO, you would see that China represented a much bigger fraction of our overall revenue. There was a point where it was 50% or more of the business. What shifted for us was a second ago I said, hey, back in 2022, we started focusing on AI everywhere. Well, as we've focused on applications that valued us for that kind of led us outside of China. Okay, so we still have business in China. We still have a great engineering team there that works and supports some great customers. But the bigger opportunities for us at the moment are elsewhere. It's been in the US, it's been in Europe, it's been in other geographies outside of China. So we have some dependence there, but it's dramatically reduced compared to a few years ago.
Who are your customers? You keep referencing them.
So
we have this great function, I always like to say, a supply chain function. So we kind of know the input, the output.
Yeah.
It has yet to be filled in. So fill it in for us.
Yeah, well, we sell to anybody building battery-powered devices. Some names I can mention are Garmin. I can mention Google. I can mention Whoop, the fitness tracking company. A lot of these companies are building health tracking wearables. We've helped them go from, years ago it was basically a glorified step counter. These days they're almost doctors on wrist, right? They're really getting quite good at that.
Does Apple want to work with you? Have you talked with them?
I won't comment on that. We don't ship with Apple today. That's a tough prospect for a small company to take on. And so we've really focused on other customers that were more appropriate to our size. Now that we're a public company, that's something we can, of course, explore.
Yeah, so you could scale up if all of a sudden a giant customer came to you and said, we need your help.
And we've shipped more than 270 million units to date. So you go walk around this building, go walk around a mall, go walk around a hospital, you're going to see our devices in use. So we're out there everywhere.
What?
I love it. I mean, you mentioned Whoop, Garmin.
Yeah.
Those are like, that's my world. But you're not consumer facing, so people don't necessarily understand that that's what you do.
But what's something we could buy that Tim and I could go to the store and we'd buy? And
your activity tracker.
Yeah, go buy a Fitbit at the store right now, and that has our chip in it. Go buy any number of Garmin watches at the store, and you'll see our chip there.
Talk to us about technological growth. You mentioned Spot. We know Apollo is part of the program as well. When you look out in your pipeline and your ambitions, what do you want the processor to be able to do that it can't do now?
Oh my gosh, that's a great question.
Larger processors, wider market?
Yeah, so first of all, what we've always done, you hear about Moore's Law, right? Moore's Law is alive and well for our portion of the world too. It's not just the bleeding edge data centers and the mobile phones. Every year our products, the Apollo product line is our processor line. They're getting faster, lower power, more integrated. And so actually what we disclosed in our prospectus leading up to IPO was a new family we're developing called Atomic, and this will be our first AI forward product. So what we've seen is we talk to customers in the AR glass space, in the camera space, in a bunch of other spaces. They want more AI compute capability on device, and we've been doing that for years. But they have these really grand ambitions that blow my mind, and so we need to build a product that's going to take us there.
Meta Platforms, a customer?
I can't talk about that. That is a great company for sure, and I would say if you look at publicly available information on them, they have some crazy ambitions that blow my mind. I mean, they talk about what they want to do with those glasses. Just yesterday, Mark Zuckerberg was talking about super intelligence making its way out, and I completely align with that vision.
Thank you so much. Appreciate it.
Come back soon. Scott Hanson, he's the founder and CTO of Ambiq, joining us. When we come back, stocks on the move. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Businessweek Daily. That's Carol Massar. I'm Tim Stenovec. Stocks given up their early push higher, but still in the green on the S&P 500, just up less than 0.1%. The Nasdaq Composite up 0.3%. The Dow down 0.2%. Figma up 215%. Just wanted to throw that one in there.
This is why individual names, even on a down day, we should point out that we have seen the stocks rally fade as U.S. drug makers get letters from the president. The president also expected to sign an executive order imposing new tariff rates on trading partners, so we might get that later on. So there's kind of still a lot coming at investors in certain sectors.
Yeah, we did also just speak with Scott Hanson over at Ambiq Micro, IPO'd this week, up 14% today. So even though we are seeing a little bit of enthusiasm fade as a result of macro and I guess we could call it macro, I don't know, concern about what happens from Washington, especially with a certain sector. We're seeing some real excitement with names that have debuted this week.
Yeah, this is why you've got to kind of look into the particulars. I just want to take a look at pharmaceuticals, because if I look at the S&P 500, 1,500 pharmaceutical super composite, it's down about 2.2% here. And this has to do with the President Trump, of course, demanding drug makers to slash U.S. prices. So once again, we see some pressure on the sector. I'm Carol Massar, along with Tim Stenovec. Let's get, though, to some particular stocks on the move. With us is Bloomberg News cross-asset reporter Denitsa Tsekova. Meta. Got to talk about Meta. It is just soaring. It's unbelievable.
It's incredible. Gains are fading, but definitely Meta is holding. Of course, the ticker is META. It's up nearly 12%. We saw so many of the names that were up kind of felt a lot of pressure, but Meta is still soaring. It crushed expectations. Of course, it's coming off the earnings report. There was so much excitement. There were so many upgrades. I cannot even keep up with the numbers. We have JP Morgan, we have HSBC, and we're not talking about like a small price target upgrade. Like HSBC upgraded from $610 to $900. So things are moving very fast. Obviously, we had good reports from Microsoft. It hit $4 trillion for some time. So incredible optimism there. Of course, all those big tech companies, including Meta, including Microsoft, they're relying on their legacy businesses to fund their pursuits of AI, and that's paying off. But also operating margins rose to 43% in Meta. So we're seeing some profitability. It's not just about AI spending, and it's paying off. The company is up 33% year to date. Incredible, right?
It's unbelievable. Rosenblatt Securities, I looked at some of the, what the analyst price targets were. Rosenblatt Securities has the street high, according to Bloomberg data, of $1,086 a share, and Meta right now at around $777 a share. It's just off and running.
It looks like investors at this point are supporting the increase in spend on CapEx, the paying big money for that AI talent, and then also all the investments that they're making in AI. Even though, as Mandeep Singh of Bloomberg Intelligence has explained, we're still not necessarily seeing the results of that spend at this point.
For sure. It's just the beginning, but they're happy to pay up.
I would really, shameless plug, I can be like Matt Miller. I would highly recommend everybody check out our podcast feed and some of the conversations we had with Mandeep yesterday after the earnings, and then, of course, in today's trade, because really killer. What's really interesting is the number one gainer in the S&P 500 is not Meta, it's eBay. Yeah. Talk to us about eBay. Ticker, of course, is the company's name.
Yeah. Obviously, company with a much smaller scale, but a very important one, showing us a lot about what's happening with consumers. Shares jumped 19%. The company projected sales that topped analyst estimates. If we look at the second quarter profit, pretty good number there. It was $1.37 a share, which is 7 cents more the street expected. We're seeing some optimism for consumer resilience. Although one metric that did particularly well was the sale of used and refurbished goods, which you can argue that is not necessarily the healthiest signs for a consumer. Clearly, there is some caution there. Purchasing power from U.S. consumers grew and helped offset demand from European markets. So clearly, maybe the U.S. consumer is a little bit stronger than what we're seeing overseas. But when we look at the stock, it has gained more than 40% this year. Just incredible rally. And yeah, it keeps going.
Yeah, it's pretty incredible. I like the sort of macroeconomic look there and maybe using it as an indicator. Okay, finally, Shake Shack. Let's talk burgers.
That's probably the opposite economic. It's, again, the consumer, but we saw Shake Shack slump 14%. It forecasted third quarter revenue that fell below expectation. And we're talking about inflation, and we're talking about cautious diners. The ticker, of course, is SHAK. The company has pledged to ramp up pace of new product launches. We have some interesting one, which fried pickles. I don't know how bullish I am on that. But they also have a Dubai chocolate shake, which was very popular. That said, that
Dubai chocolate is everywhere.
It's so big.
It's down at the World Trade.
What is it?
It's,
oh my gosh.
There's a Businessweek story on it. You should check it out. Dubai chocolate.
I'd like to eat some of the chocolate.
Well,
next time.
Yeah, next time.
Sorry, Pisaccio prices are going well.
Continue.
Anyway, the company said that its efforts are showing promise. They're trying to keep lists on costs, but clearly that's not enough to lift sentiment. One metric that clearly is weighing is sales at established restaurant climbed less than what analysts were expecting. Shake Shack is down 5% year to date.
All right, Denitsa, Tsekova. Check out our Stock Movers podcast. Find it on Apple, Spotify, or anywhere you get your podcasts. That's going to do it for this hour of Bloomberg Businessweek Daily. Coming up on TV, The Close. Tim and I continuing right here on radio. This is Bloomberg.